The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 25th terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having an extraordinary day. Let's make sure we do everything we can to squeeze everything out of it. Of course, the easiest way to do that is always to remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to go toss at us. Today, we're going to go take a look at the circumstances. Well, we'll try to take a look at the circumstances of the bulls and the bears. The markets are flat out here, so maybe there's no circumstance. But you and I, we'll go surf these charts. We'll go see what we can see. I'm absolutely grateful for your presence with me here this afternoon. I'm here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Thursday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, as I say, the markets are flat. The Dow, she's up 2 points. The S&P up 1 3/4 points. The composite up 5 points. The Russell 2000 is almost totally flat out here. Even Steven, the DAX closed up $2. The FTSE was down, at least the FTSE was off a little bit, down 37 points. Gold, flat, 11.72. Silver, flat, trading at 15.82. Light sweet crude, back 65 cents. She's trading at 59.62. A lot of movers and shakers in the market. You got Universal Healthcare, that's up $11. Lindsay Corp up $8. Tenet Healthcare up 7. A lot of healthcare stocks responding to the Supreme Court ruling out there. Regenerate Pharmaceuticals up $7. Number of stocks also moved to the downside. You got Netflix up $20. World Acceptance Corp not accepting too much, down 20% out here, off $17. Methode Electronics down 13. But let's go surf around the markets. One of the things we're going to take a look at. We'll do it during the, I think we'll do it during the second, well, we've got 10 minutes in this break. I tell you what, let's just kind of surf around the markets here, and we'll do it when we do it. We'll do it shortly after that. What is it we're going to do? We're going to go take a look at the, belief, myth, fallacy with regard, well, let me just pose this question to you. Are you one that believes that if interest rates go up, the market's going to go down? Or the market's going to croak? I mean, there's been plenty of news stories out there. There have been, we've had what? We had the guy we had Gary Cohn at Goldman Sachs do some kind of video out there. You got guys talking on Bloomberg TV and Fox Business and CNBC out there, right? To get all these guys that are talking about interest rates and the cratering that's going to take place in the market. Are you one that believes that as well? Well, during the day, we'll go take a look at that because it's all BS. It'll be all before Steve because we're going to go take a look at the real facts out here, and then you can assess what it is that you want to do. But first, looks like we're going to go back out to California and speak with Garo. Garo, how are you doing this afternoon?
Thank you, sir. How about you?
I'm doing very, very well. Thank you. Let's see. Today, you're taking a look at Gilead Sciences, GILD. Tell me what you're doing, how I can assist you.
Yeah, if I can see your chart, the daily chart, let's say 2 months or 3 months chart, and
Yeah.
if you use the indicator SAR parabolic, SAR parabolic, if you have it or if you use it or not.
I don't, but let me see here. I might be able to put that up here. Give me a moment, and I'll see. But continue. Go ahead, continue. Yeah, actually, I've got it on my system here right now. Okay. In fact, let me do this. Let me turn a couple of things off. We'll turn off the TAS profiles because we can always turn these things on again. Okay, go ahead. I'm all yours.
Okay. On that SAR, if you bring it and magnify it in 1 month instead of having 6 months, so you will see that dots very properly. And I use those dots all the time. That gives me an indication or guide me where to go long or short. On the bottom of the candle of today on monthly chart, you will see that the dot is at the bottom. It says $120.60. If you put the arrow on the dot and see the value of that dot is $20.60. That's where I'm going to short it.
So you know what? I had lost my screen there just for a moment, and I apologize. I was trying. So restate that again. That way our viewers can. In fact, let me do this here for you. I think I probably can increase that dot size just a bit. Let me see if I can. There we go. Now we've got little pluses out here. Okay, so go ahead. If you wouldn't mind, just go ahead and repeat that for our listeners.
Yes, sir. That's where I get my indicator. That SAR does me miracles. It's already hit already. You see? What happens when that candle comes and hit that dot? The dot goes up. You see? Today's candle. That it gives an indication from that point that stock or that value of that price is going to go lower.
So you're looking. Are you looking at yesterday's? You're looking at yesterday's reading.
No.
The 120.83. Are you looking at today's?
Today, sir.
Today.
You see, the dot is already gone up. That means that the candle had hit that value.
Got it.
So you have to see that previously, and you have to put a previous order. You said you put a stop limit price at $120.65 or 60 cents, and whenever that value comes and hit that value, the candle comes and hit that dot, it will short it at that price.
Got it. Very nice. Okay.
This is the way I work, and those dots does miracles to me. So some people, they don't use it, but I use it every minute and for each trade I use that dot.
Now, are you using it when you're looking at it? And thanks for sharing that. When you're looking at that, are you using the daily time frames, or are you using the intraday time frames?
At any time frame. At 5 minutes, if I want to go 15, 20 cents or 25 cents or 10 cents, I look at those dots at any frame, at every time frequency. You see?
Oh.
Now, one of the other points that it gives me the confidence that from here this is going to go down. If you look at 15 minutes or 30 minutes, you'll see that there is the support. After that, there is no other support after that at $120.60. I want to see that. Do you agree with that price, or I'm off?
Well, let's take a look at, since you use the tools that you're familiar with, let's try to use some other tools here and see if they can complement what it is that you're looking at. So one of the first tools that you and I can put on our chart out here is, let's just take, well, how about that? Let's just take a look at our TAS market profiles now. With regard to its levels of support and resistance, its next level of support. So let's assume at this stage here that you're correct, and Gilead Science is going to go ahead and correct. What this would tell us, and this is much further off from a price point of what you, I believe, typically look at. This says that your first level of support is probably 115.39 out there. So that's what that tool would show. With regard to taking a look at price and volume, the day that you've got to contend with is June 19th. Because there were 21 million shares on that day. So what I'm going to do, since we know that that's a day that's got a high volume bar, not any wide price spread or anything, but just a lot of volume, then I'll go shift down to I think you said a 30-minute chart is something that you'll use on occasion?
Yes.
Yes. Yeah, so let's go see if we can find out on that date where all the volume came in. That was June, what did I say, June 19th, I believe it was? Yeah, so on June 19th, that big volume day, that says that what you should find as support as potential support inside of Gilead is right around the price level of 119.55. There were 3.6 million shares that traded at that price point, and then again, right around that same level on June 19th, another 3 million shares right at around the level of 119.79. So it would seem to me that from the short side, that's an area that you need to crack on the way down. Is that a level that you're looking at as well, or what are you looking at as downside potential inside of Gilead?
Okay, I want to know that does your indicator show that if that goes down from here, from this price, will that hit that 21-day simple moving average, which is $117.27?
Well, let's see here. Let's put a moving average on here. Let's go put the 21-day. We'll shift it to a simple. Give me a moment here. So you're looking at 117 and change out there at the moment, right?
Yes.
You know what? If that does not act as support, I couldn't tell you whether at this stage here whether that price is going to hold. Here's what I would say to you, is that you and I looked at that June 19th date, and I'd say the low of that session should act as support, 119.55. If that level is broken, then I would go with you that a next level of support to look at is that 21-day simple moving average at 117.27. And then with regard to next steps below that, I would say it's the 115.39 where the equity may find support on its move down. That's with regard to utilizing your 21-day moving average, as well as taking a look at where volume lies inside this equity, as well as where its TAS market profiles are. And that's how I would take a look at it.
I see. I don't go for the volume, Steve, at all. To me, volume doesn't mean nothing. A price of a stock can go up with no volume, or it can come down with no volume.
Absolutely.
So volume, it's irrelevant to me at all. I don't look at it. That's why in any of my charts, I have volume at the bottom. But my main point was that 117. After that, I don't care what it happens. 119 or 117. After that, I will get out. After that, it may go down to a $1. Once I get my $2, $3, then I really don't follow that chart. I'll go to the next one. Something else.
You know, look, I agree with the fact that when you take a look at different indicators, there's really no, from my vantage point, there's no one single indicator that's going to provide you with all of the information that you need. I know I mentioned this yesterday. I don't know about to you. I think it was during the show that when I take a look at the trading pyramid, that volume, as an example, supply and demand represents a portion, 1/4. Now, you know, it's hard to say in each chart what the weighting structure goes. With regard to power, energy, and angle, using that parabolic SAR as you do, you know, that's another aspect. Hey, Gario, I've got to go to break here. You're welcome to hold if you want, but if not, thanks so much for calling in.
No, I'm done. Thank you, sir. Thank you very much.
You bet. Have a great day. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 5, S&P's up 2, composites up 5. You know, back on that Gilead chart, there is one pattern out here that with today's candle session, is not over. But if you take a look at the trading day from June the 11th, on that trading day, and, you know, when we were talking with Garo, he was taking a look at, I break the market down into 4 different elements. Those 4 elements being volume. So take a look at supply and demand. Now, there's a number of different indicators that you can use there, at least a half a dozen. Momentum. It's really important to understand what the momentum of the chart, whatever time frame it is that you're taking a look at, number of different tools that you can use for that. Garo was using for the energy or the angle, he was using that parabolic star. You can use moving averages. In fact, he actually was using 2 tools there that are measuring, power and angle there. Not that that's a bad thing, but a moving average is another way for you to be able to measure the energy. And then you've got volatility and liquidity, Bollinger Bands, things of that sort, standard deviations. We can also take a look at when price is moving out with regard to momentum. So just to add to the momentum aspect that we are taking a look at in Gilead. Gilead is running out of momentum to the upside here. And how do you and I know that? Well, we know that, right? So let's take Garo's energy and angle as 1/4 of what's going on inside Gilead. Let's take as another quarter momentum. In this case here, with regard to momentum, the highest relative strength reading that took place once it got above that 70 line out there, took place on the trading day of June 11th. The actual reading was 76.04. Now, notice how the market, or Gilead, went ahead and made a higher high, did that yesterday, but the reading on that was 72.15. So price was moving higher, but its relative strength was actually moving lower. Now, none of that really matters until you get a reversal signal that shows up. And as we speak right now, 1:26 in the afternoon, that's what you have inside of Gilead Sciences. You've got a reversal candle. At this stage of the game, it's a bearish reversal signal out here. And it's important to take a look at. Now, where does price fall? You always got to take a look at support. Each of us use different tools to identify support. At this stage of the game, I would say that Gilead has not broken any levels of support, because if you take a look at two other moving averages, I like to use the 8 and the 13 that help identify momentum. Why? 8 and 13 just happen to be part of the Fibonacci summation sequence out there, and it just simply is, for me, is a quicker turning and helpful to understand. If you just take a look at just Gilead, you can see how since the trading day of May 8th, it has not been able to close below really either of those. Certainly the 13-day, that's the white one that's on my screen out here. In any event, I just thought that I would go ahead and pass along that to you. Now, let's go take a look at the markets just to see where things are at. And then we'll talk about interest rates and the markets, because the question I posed to you, are you an individual that believes that if interest rates go up, that the markets are going to go down? Because what I'm going to do is I'm going to share with you data, actual data out here that goes back 22 years. Do you think 22 years worth of data, actual data points, is maybe better than just believing what somebody might actually communicate to us on the radio or on the air out there? Well, I'll share with you exactly 22 years worth of data, and then you can make your own decisions. But with regard to the markets out here, they are flat or slightly up. But if we go take a look at what's going on inside the summation index for the New York Stock Exchange, as well as the Dow, they still are below zero. So price is slightly up today, but yet with regard to who really is in control of the markets, it's actually the sellers. If we take a look at the price oscillator, day 2 below the zero line. NASDAQ Composite is fighting it tooth and nail. Now, the NASDAQ is up just a tad, but quite frankly, it's price oscillator, meaning that it has it's got net declining issues. Not enough. I think it needed like 73 or something like that. I can't remember off the top of my head, or even inside my head out there, but it's somewhere inside there. It's a fairly easy thing by the end of the day for sellers. If they're really going to control the market, they've got to get the NASDAQ Composite to come along with it. And at this stage, that is the indice that is fighting tooth and nail to try to pull things to the upside out here. But inside the NYSE, inside of the Dow, it is sellers that have control of the market. If we take a look at the VIX index, it's bumped its head off that 50-day exponential moving average, which was 1377. The actual inter-session high so far has been 1357. So it hasn't gotten all the way up there. Still, from a liquidity standpoint, below that 50-day, says there's plenty of liquidity inside of the market. With regard to other liquidity gauges out here, you take a look at the euro, Japanese yen, not doing really a whole heck of a lot out here. In fact, it's off of its session lows if we take a look at its chart out here, but we'll call it really neutral as we speak right now. What's not so neutral out here is really the current trend inside of the market. And this is the S&P 500. This is the S&P 500 futures contract. And it really is this diagonal price channel that probably is telling the entire story out here. This is Steve Rhodes with TFNN. Markets are relatively flat. We get back from this break. Let's go take a look at the 10-year, the 5-year, the S&P, and some actual facts. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Flat markets out here. Of course, we took a look at the summation index for the New York Stock Exchange, the Dow out here, so we know what's going on there. I had briefly mentioned, I'll go ahead and punch this screen back up on my, punch this chart back up on my screen. I just need to change my workspaces out here. And I think that with regard to general markets, what they're doing, what it is that you want to pay attention to, I'm going to just say the 2-hour chart is really helpful because it's really got a nice defined descending price channel out here. And yesterday when I was on the show, what you and I was during Tom's show out here. We were taking a look at how the ES mini. I'll just put the 30-minute chart out here on my screen. Let me get rid of the A to B equals C. I'll put that back up there in a moment. There we go. Well, here's the chart. Here's about the time frame. Let's do this. Let's just expand it out here. So here I was doing Tom's show from 3 to 4. As we were coming into that 6 o'clock, 4 o'clock time frame here, we saw the markets were moving lower. We saw that markets were in the S&P, the ES mini, the S&P futures on the 30-minute chart continued to push lower with less relative weakness out there. Just the opposite of what we looked at when we took a look at that Gilead chart. And that's how important this actual pattern is. In fact, there is no other pattern that I've been able to identify that is called every single market top. Doesn't matter whether it's a star, a planetary, a lunar phase. The one that has called all of the major tops, and I'm talking before crashes and everything, has been this pattern. There is no more valuable pattern that I'm aware of. And you just take a look at yesterday as we were watching the markets moving lower. I was saying be cautious, okay, with regard to being able to jump in here because the market was going, if you hadn't jumped in on the short side, be careful because the market was pushing lower with less relative weakness out here. Now, what actually took place as we came into the 5 p.m. hour out here on the 30-minute chart, which you got that nice little bullish engulfing candle. Now, the market's only open for another 15, for 15 minutes. I want to make sure it was the 5 o'clock session out here. And so, that's not really a big deal, 15 minutes with the market moving higher. But that very next session, once the market did reopen, the market continued higher. That was your confirmation that there was going to be some type of bounce. Now, it was quite a bounce, you have to admit. I was watching the bounce unfold, but then at about 4 o'clock in the morning, when I got a signal that hit my phone, which woke me up out of bed because of the flashing light, which was the signal that I was waiting for price to get up into this 1211.75 mark out here. And in fact, that's really the area, or the general area where price actually held. So with regard to just then trying to understand, hey, okay, now what are the markets actually doing? It's really helpful to take a look at multiple time frames out here. And those multiple time frames, for me, I go from 30 into the 2-hour chart out here. And we take a look at that 2-hour chart. It then became very clear to me that with regard to the market, and if there was going to be any kind of real breakout here, that this first barrier, this descending tops line out here, would fail. That would be your first indication. And lo and behold, it has not failed. In fact, I drew that in this morning, just so you know. I drew it in at about 5:15 a.m. This morning. Was working on the newsletter, got that out by about 7 o'clock. So you're looking at the exact chart, one of the lead charts with regard to being able to help clients plan their day and what it is, because everybody trades different vehicles, different time frames, and wanted to understand what was going on. And sure enough, that horizontal line, that 1211 area, acted as a resistance. You've got that descending price channel. So again, I still state, if we see this level get broken, and then we were to see price move above that 1211, close above 1211.75, that would say that the bounce is over out here. Now, what we may get fortunate enough is over the course of the next couple of days is to get a 7th wave pattern to the downside inside of the ES mini. Anyway, so that hopefully that just rounds things out for you with regard to what's going on and utilizing some tools out here that we were just taking a look at inside of the 30-minute chart. That's a beautiful pattern. And we were looking at that in the case of Gilead Sciences out there. Now, let's go take a look at, because we've covered this before, but we haven't covered it for a long time. This chart here, now one of the cool things with regard to the e-signal platform, that's what you're looking at as we speak right now. The top portion of my chart is the 10-year Treasury yield. The center portion happens to be the 5-year Treasury yield. Do we need both of them up there? No, not really, but I've got them up as we speak. And the bottom portion of my chart is the S&P 500. And there's a ton of talk and stuff all over the place. And I scratch my head because, what you and I have done is we've taken a look at this chart here. And anybody who believes that the market will not go up with interest rates going up is just, you've got to wonder, what in the heck is it that they're actually looking at? Now, one of the cool things about this chart here is that I can take all of this data. I'll show you what I can do. And instead of just looking at it from a chart standpoint, now the blue line that you're looking at on my screen out here, they're all closes. So these are the closes of the actual trading session out here. But I can take this chart and in an instant, I can convert it from data or chart line information to actual data points, to the actual close of the 10-year, to the actual close of the 5-year, to the actual close of the S&P 500. And so what that helps me do is that helps me just run some normal routine information to say what if, okay? And so that what if, I asked you, do you believe that if interest rates rise, and we'll just call it the 10-year at this stage, if the 10-year is rising, because the 10-year, 5-year, they're all going to go up for the most part in sync out here. Not always, but let's just use for the most part. So if the 10-year interest rate is rising, are you one that believes that the market is going to crash out there? Well, as far as the data, I was only able to go back. Let me turn this back to a chart format out here. I was only able to go back to November 2nd, 1993. I think that's somewhere close to 21, 22 years worth of data. That's 5,450 trading sessions. So I think that's a pretty decent sample size. So the question that I would pose to you is, how many times has the 10-year yield rose from the prior day? How many times do you think it's risen from the prior day? It's 47%. It's really almost a coin toss there, right? But it's risen 47%. Now, of those days, of those 2,500 days, okay, out of that 5,450, how many times has the yield risen? Has it rose? I don't know what has it increased out here from the prior day, and the market gone down? What percentage of the time do you think that amounts to? Guess what? Less than half. 42% of the time, you have the interest rate rising and the market going down. That means just the opposite is true. That means that the other 58% of the time, yields are rising and the market is moving higher out there. This is taking a look at, as I say, 5,450 touch points out there. This is looking at a chart where we can see yields rise. We can see the market moving higher out there. In fact, you can take a look at what percentage of the time as a 10-year yield was it down and the market closed down. It's really just a coin toss out here. So I guess the point is you're hearing lots of spin, lots of real BS, because it's all before Steve. It's all before you and I just really taking a look. Now, this goes back, as I say, to 1993. That's where you had a 10-year, during that time span, the 10-year, the lowest was back in 2012. That was around 1.4%. The highest yield was around 8%, and that was back in the 1994 timeframe out here. So don't buy into all this hogwash stuff that we hear. It's all fodder. It truly is. If we're just going to go ahead and take a look at just some simple statistical analysis, and you and I, we get to look at the actual chart at the screen to see what happens out here. So it's just people truly pushing their own agenda. I don't have an agenda here other than to say, you know, let's not believe everything that we say. Let's go ahead, you and I, let's just do the work, and then that's going to make things a whole lot easier for us, and maybe we can become better at anticipating what the market might do out here. So let's go back to the markets, these flat markets. Let's move away from that. Let's move on to what is the market doing today? Hey, just a very narrow opening range. Our opening range inside the ES Mini between the 2,098 to the 2,107 level. Those are the yellow horizontal lines going across my screen out here. So trading with inside the box has really been the only opportunities that you've had. There's really been no breakout. Now, this opening range really taking a look at the intra-session high and low during that first 30 minutes of the market open between 9:30 and 10 a.m. out here. So relatively a quiet day. Of course, we know that just by taking a look at what the markets are doing. But until we break to one side or the other, there is no momentum anywhere along the lines. What you and I do know is that the market is unable to break above that descending price channel. It can spike it during a 2-hour period of time. But truly, the body of the candle is the essence of price. That's what's really giving you your entire picture out there. So there's the opening range. There's your quiet day. Let's take a look at some of these equities, or maybe let's take a look at what's going on inside. Actually, let's take a look at the following. You know, one thing that's kind of interesting out here is, we've got gold priced in euros and dollars. Now, this is a pretty interesting chart. I believe it's pretty interesting. In fact, I think it's a new way for you to be able to take a look at what gold is really doing out here, because it's just not the Dow, because all the fear and everything else is really over in Europe and Greece. It's not here in the U.S. The fear here is, I guess, the interest rates, right? Or, I mean, what kind of grease fire is truly going to spill over to us here in the United States? I don't think a whole heck of a lot. And so what now the issue is with regard to interest rates, but you and I, we put that to bed out here. If you're the data should have showed something totally different than this. If the market was just simply going to crater every time interest rates rose out there, it's just not the case. At least it's not statistically the case out there. And if we take a look at gold here, what's interesting about this, it looks to me like gold still wants to pull back on the U.S. dollar basis. It wants to pull back into this 1160-ish type area. Maybe it's 1152 or so. In that range where it finds some support, just a slightly higher low out here off of the November 2014 to the March 2015 time frame. We may get gold to pull back to that level, along with in euros, priced out at about the 1,000 euro mark out here. Mine says 998.70, but we'll go ahead and give it a few euros out there, and that's where we may find support. But the interesting thing is, now put this on my chart out here, put it on my screen. We'll go take a look at it. We'll take a look at the HUI and the XAU. Let's take a look at which I get the HUI is the first one on my screen out here, and we'll put that up because this is kind of interesting. In fact, we'll get I think we'll get a pretty decent feel. Let's come up here and take a look at. Let's take a look at our seventh inning stretch candle formation to the downside. If we start from this high out here, and this is take a look at the HUI, and we take a look at the January 22nd high. What you're going to see is that right now today we're in that seventh inning stretch. That can go on if we see a little bit lower low tomorrow. It extends itself. But oftentimes when you make these seventh inning stretch candles, that is where the market will have a reversal out here. Now, is it truly the seventh inning out here? It may not be. It may, in fact, if we take a look at multiple counts on the wave counts on the way down, it could also be the sixth, because if we're sixth inning, because if we come take a look at this April 30th high, which seems more likely, more plausible to me, that we're really only in the sixth out of seven. But the bottom line is we're getting towards an area here. We're getting towards a point where the question is going to be, will it be the mining equities that actually tell us a little bit different picture out here, at least from a trading perspective. But it looks to me like we are getting close to that area where a reversal, if we see some type of reversal that then fails out here, that too will give us a ton of information. Now, you got the HUI and you have the XAU. Let me see. I've got the XAU on my screen out here. I don't know where we're at. Me today may have been, where is it? It should be right in front of me. There we go. It's all the way down to the bottom. So it was in front of me. Let's just take a look at this as well, as soon as my screen populates. And let's come back from that January high out here, and let's do that count to the downside. No, okay, so here we're okay. Here actually the XAU is stronger than the HUI at this stage, but thought we had a count. Give me a moment here to, I think that we do, but that's coming off of this high here from May 14th. Yeah, okay. So today is the day where coming off of its high, its most recent high out here, which was May 14th. I think that's the one that is most pertinent. You can see that we're in that seventh inning stretch. So if you're a trader of the GDX or the Nugget or any of those ETFs, look, if you're short, what you want to do is you want to make sure that you're really aware that we're now starting to get into that area, and we don't have any synergy with regard to gold. What you and I know is if we take a look at a correlation chart between gold and the mining equities, they basically do the Texas two-step out there. They do the tango. But, and we don't have any, I don't think we have any, I don't see any real clear patterns inside of gold that would tell me that, at least I don't think the gold chart is in its seventh wave to the downside out here. But we're getting pretty close. We're getting pretty close to a potential trade. What you'd like to see is you'd like to see a confirming seventh wave. And you'd actually like to see some kind of bullish reversal signal out there. And then you'd also maybe like to see things get above a market profile out there, at least to have a trade. In fact, if we go take a look at, just out of the heck of it, let's go take a look at NUGT. I know that is an ETF that folks trade out here. I don't know know that it's in the same wave count to the downside, but we can find out pretty quick. Now, in this case here, this is the January 22nd. So let's come take a look at that January 22nd level, and then let's go ahead and take a look at, give me a moment here just to do this. We'll see if I can do this within the next 15 seconds or so out here. Let me see. Let's try to explode this up and see where it is that we're at. I don't think we're going to find, yeah. Well, it's in its sixth wave to the downside, but I wouldn't rely on the nugget. I would rely more on the XAU, the HUI, with regard to gauging. But we may be very close to a nice little tradable bottom inside of the mining sector out there. So we'll call that a Stevie freebie out here. Right now, we've got the markets. The Dow is up $2.93. Woo woo. However, it's sellers still in control. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, to these flat markets out here. So if we were going to summarize, just as I was typing into the Tiger's Den out here, if we're going to summarize, what does all that mean with regard to interest rates and its applicability to the market, and the mere fact that the reality is the 10-year interest rates can rise and it's not going to impact the market. It's not going to crater out there. It's more likely some other things that would actually do that. It was pretty easy to see, for example, in 2000, where you had all of the dot-coms that had nothing underneath them. You could see that cratering. That wasn't too hard to figure out. You could see, with regard to the housing bubble, with regard to the leverage that was going on. You knew everybody and their brother were buying homes and flipping them and getting in, and with mark-to-market accounting. Tom often talks about, hey, the ETFs with regard to, let's say specifically the metals or what have you. It's great when things are going up, but when things start going down and you've got to sell, it's kind of like a self-fulfilling prophecy out there. Well, hey, that's what mark-to-market is really all about. So when the FASB, Financial Accounting Standards Board, got rid of mark-to-market out there, that was to stem the move lower inside. Then they called it mark to whatever in the heck you want to market to, just stop the bleeding out there. But what does all this mean out here? Well, what it means to me is the following. It means that interest rates are not going to be the thing that are going to crater the market out here. That's absolutely what it means. And it means that the S&P 500, which has a price projection of 2350, that's equal to the consolidation of the past 16-year consolidation out here. It's not really the past 16 years because we broke out of that back in the 2013 timeframe. It has a price objective of 2350. There's really nothing that is totally going to get in the way of that taking place. In fact, there's possibility that we'll see 2350 even this year. Even this year, I can see that actually taking place out here. But that pattern has not completed. It is also not completed with regard to the long-term pattern inside of the Russell 2000. If we take a look at it, it's got a pattern that says price ought to get up into the 1350 area. We're only at 1280, so that's another 70 points or so. In fact, there's every reason to believe. We can see here, see how the Russell 2000 is actually going up on a monthly basis, and it's doing it with less relative weakness, but we don't have and there have been, during this time period, there have been a few bearish reversal signals, but none of them have ever had follow through. In life, folks, you got to have follow through out here. And it's the same way in the markets that we trade. It's why you want to understand your Japanese candlesticks out here. That doesn't mean that what's going on in the short term is anything but, it's a buying opportunity. Bottom line, it's a buying opportunity that is being formed out here. I don't know whether that buying opportunity was yesterday. I don't think so. Or it's today, or it's tomorrow, or it's Monday, or it's Tuesday. But it's really just setting up a buying opportunity, and the markets will continue to move higher. And you and I will see that 2350. We'll see that 1350 inside the Russell 2000. Now, I can't guarantee you on that, but at least at this stage here, if you believe that there is something that's truly going to crater these markets, well, send me an email. Steve at TFNN, or calling into the show. And you and I together, we can go do some of the work out here and either prove or disprove that theory. I wish I had the other chart on my screen. Now, there's a lot of talk about margin interest, but the reality is, let me see if I've got that here, workspace. I probably can't do that, even though I did have it in a couple of seconds. Maybe I'll try to do that tomorrow. But the reality is that the margin interest is not an aspect of what's going to create the market either as we speak. I'll just have to show you that chart. For this stage, you're just going to have to believe me at least for the next 24 hours. I'm hoping that I can find it because I don't want to have to go rebuild it. In any event, folks, stay tuned. Our man David White, he's going to be up next, and it is a terrific Thursday. That means after David, we've got the Tom O'Brien Show and then the Andy Heck Show from 5 to 6. So have a terrific Thursday, and I look forward to seeing you tomorrow. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.